Welcome back, everybody, to another incredible New York session market open stream. I'm your host, Roy Dunya, co-founder of Chart Addicts, full-time day trader, and macroeconomics extraordinaire. It's great to have all of you guys right back with us this morning for another market open stream. So two things we're going to cover. We had a final GDP report that released about an hour ago that showed us the final numbers for the third quarter of 2023. Let us see our performance slightly lower than expected. However, this is a positive sign for the stock market because it shows that the Fed doesn't have to be as aggressive. So high GDP typically is associated with high inflation right now, because as long as the production is still active, everyone's going to be paying higher prices. And so having GDP come off as a little bit lower than expectations might seem like a bad thing, but it's actually positive for the stock market because it allows the Fed to be a little bit more loose with their policy, which over time is going to be bullish for stocks. Let's talk about what happened with NAS100. We had this massive sell-off yesterday, and ever since then, I've been getting the text messages. Roy, is the market bearish? Are we finally flipping? And the answer is not yet. Typically, and this is a few reminders that I want to give everybody just from my experience, whenever the market makes an aggressive retracement like this, typically they come in twos. So you'll have a massive sell-off and then some kind of retracement. We might have one more massive sell-off before the overall trend continues. So I would not be surprised to see another day of selling, but does that mean that the market direction is changing, or does that mean that we're just in a retracement? Personally, I think this is just a retracement. We mentioned this yesterday that when in doubt, you got to zoom out. So why are we seeing the sell-off right now? It's very obvious that we're at the all-time highs on NASDAQ, and the market is just it's releasing some of the pressure after this extended bullish run. Now, something else that's very important here is that the bullish run, it ain't done yet. Just because we had a little bit of a rejection, it doesn't mean that the bulls have not shown that they are still in control. Buyers have not shown any intention of turning around just yet. And so even though the market crashed yesterday and we had a massive sell-off, that does not mean that the market direction is turning around. This could just be a pullback for the next push up. But if you look at the previous impulsive move here, and just kind of project that out, we still have a little bit of room to go. So typically with these moves, you'll have kind of an equal sized push. And so I think that there's still a little bit of room here on the upside. And that's why I'm still bullish, unless the market gives me a reason not to be. So with that being said, we formed a low last night over Tokyo session and Australia session, had this retracement overnight. So there's two options: is we can short up here at 16,855, which is the 88.6 from the top. So all I did, measured my fib from the top to the bottom. This is the 88.6. And so if the market gets here, there's an opportunity for us to short it, whether it's a scalp or an intraday trade. On the flip side, because we're still forming higher floors and we're still forming higher ceilings, if the market comes down and creates a new higher floor, this is going to be an indication that buyers are still in control. If we cannot break this previous area here, it'll show that buyers are still dominant, that the market is still willing to bid these prices higher and higher. And that means that there's a potential for us to buy here and continue to trade this trend. So let me just cover that one more time, because this is the trade for today. If the market can stay above these lows here, if it can just form a higher floor, we're going to be buying it up. And our target is going to be 16,850. If the market swoops down and just starts to continue to the upside, we can potentially sell at 16,850. Make sense? Cool. Okay. We talked about this last night on the review session. If you guys attended, let's go ahead and Welcome back, everybody. If you're watching this on YouTube, drop a like real quick and hit subscribe if you're not already subscribed to the channel. And if you are subscribed to the channel, good for you. You're making good life decisions for yourself, and I'm proud of you. And in case you haven't heard that recently, I just want to make a reminder that if you're working towards your better goals and you guys are working towards becoming a successful trader, building that self-discipline, and understanding a strategy that you will then apply in 2024, I just want to say congratulations for being on the right track. You might not have all the results that you're looking for, but being on the right path is extremely important. Direction is more important than speed. So today, give yourself that credit. And if you don't want to give yourself that credit, I'm going to give it to you. Okay, so yesterday what we discussed on the review session is that when you establish that Australia low, the Sydney floor, I'm looking for a retracement back to this level. So we can draw a Fibonacci from the low to the highs. And really it's 16,640. So anywhere between 16,620 and 16,640, I'll be looking for a turnaround. This is back at the lows. Now, what we also discussed is that sometimes the market does not come all the way back down to those lows. What could end up happening is that you have a bullish impulse. We have a bullish impulse here. We're going to retrace about 88% right here and then have that continuation. Okay, so that's what I'm watching right now is we're either going to come back down to this area. Okay, so if we just break right through, I'm going to enter buys here. If it starts to create this flag formation, then the trade is actually going to look like this. This is not the kind of trade that I would personally take, but this is just what's going to very likely to happen next. And then I'll just look for shorts up here instead. Okay. Good morning, everybody. Good morning, good morning, good morning. So we got two-step in the house. Alex, good morning. Bianca, always great to see you. My guy, Bobby's in the house. Bryce, congratulations, guys. Put W Bryce in the chat. My guy got his brown belt last night in jiu-jitsu. And in case you guys don't know anything about martial arts, being a martial artist is an extremely tough and disciplined lifestyle. And it's actually the lifestyle that will lead you to becoming the best trader too. So the difference between, let's say, a white belt in jiu-jitsu, and then there's a blue belt. The white belt don't really know much. Blue belt kind of got they really know technique now. They can break your arm if they really wanted to, but they're still not, really good at getting out of certain maneuvers and transitioning and certain things. Once you get to brown belt, a brown belt is just a black belt that hasn't put in the hours yet, or a black belt that's just still earlier in the game. That person could kill somebody. All right, so congratulations, Bryce. I think that's huge, and I need you guys to fucking remind me to stop roasting Bryce and to stop talking mad shit about Bryce because, I'm gonna get injured, right? I'm gonna get fucked up. It's all fun and games until somebody starts rolling on the ground and shit and hitting one of these, and you're just like, all right, bro, this is not what I expected. This is not what I wanted. You got it. It's your girl now, bro. I don't want. All right, you see somebody at the gym, you're at the bar, somebody bumps into you. You look at them. You look at their ear. They got the cauliflower ear, right? All of a sudden, they pull out their brown belt out of their fucking back. Just run. Let them have it. It's your drink now, man. It's your seat. I don't want it. That's the way it goes. If they got the cauliflower ear combo, just let them have it. Since Bryce is going to put Roy on a chokehold, all right, let's not get ahead of ourselves now. Let's not start talking crazy. Get me in a choke. My takedown defense is top notch. I can't wrestle for jack shit, which is why I had to work on my takedown defenses. Okay? Because I ain't taking this fight to the floor. It's just not going to happen. All of a sudden, they're grabbing my. That's why I hate jujitsu people, man. They're just grabbing my ankle and my toe and whatnot, bro. Let my foot go. Get off my foot. Let's have a real fight. All right. Jamil says, huge shout out to Roy and the rest of Chart Addicts. Joined the December masterclass, and now I'm a funded trader. Now it's time to get my first payout. So if you're doubting, stop now. He knows the game. Everybody put W Jameel in the chat, or just put W Meals, Meelz. Put W Meals. Bro, seriously, congratulations. I've been seeing you get on all the calls, asking all the right questions, and note takers are money makers. And I saw from the very first class when you were asking deliberate questions that you were going to have a bright future trading NASDAQ. So I just want to say congratulations, bro. And just remember, when you get funded, you get your first payout. This is the start of your journey. We have not reached, we haven't reached a destination. Right now is where it matters the most for you to stick to the things that got you to the dance. A lot of people get to the first payout and they start to feel overly confident. And what happens is they get a little bit cocky with their sort of discipline. They get cocky with their execution, kind of trading on the go and not really paying attention. So your priority is to think of every day as the day one. This is where your road begins. So keep doing the things that got you to the dance, bro. Keep remaining that great student that you are, and you're going to have those, you're going to keep recreating those results. And everybody who's watching, and actually, Jamil, if you could offer the people in the chat something helpful that may help them either trade this strategy or just get funded, what advice would you be able to give? Yusuf said, I passed my challenge on FTMO, but I'm down 8% on the funded account. What do you recommend I do? Well, first, I recommend that you bring me these problems before they reach negative 8%. Okay? Because it's the same thing that happens with our coaching students, is that folks will show up to me once they're right on the ledge, right on the edge, and say, I don't know what to do. Save me. And it makes my life a lot harder. The advice I could give you is you're not going to make back the money over leveraging. You're going to have to build it back one piece at a time. And so lower your risk to 0.2%. So right now you have 2% left before you blow the account. So basically, if you're risking 0.2, you have 10 trades. You have 10 trades before you blow the account. So that'll give you plenty of opportunity to start building back up. And then you want to look for trades that have a 2-to-1 or a 3-to-1 risk and reward. That way, if you're going to risk 0.2, you're going to be making back 0.4 or 0.6%. And that's how you slowly crawl away from the negative 8% to negative 7% to negative 6% to negative 5%. Once you're at those levels, you can go just a little bit higher in the lot size from 0.2, maybe to 0.25 or 0.4. That's where you can start to really make back that difference. But you cannot make it back from over leveraging. So be very mindful of that and make sure you're not falling in the trap of believing that you can go big on a couple trades and make it all back. That's how you blow the account. Don't blow the account and prioritize keeping it versus making money. If your priority with a funded account is, I'm never losing this thing, win, lose, or draw, my priority is not to make money. My priority is to keep the account. That's how you stay in the game long enough to make real money. All right, makes sense? Cool. Few things that we're going to talk about today. I want to give an update on the Trump removal from the ballot. Why is this important to markets? Because these unexpected events are what cause the most amount of market drama. When there's a Federal Reserve decision, but everyone's expecting it, it actually doesn't move the markets as much as people think. But if there's a random news event that comes out, like China vowing to take back Taiwan, and that's the news that was circulating around yesterday, which kind of helped hide this market move. If we have these unexpected news events, that could be a massive shaker for the markets. So we'll cover that. We'll also be covering updates on peace treaties in Israel, Gaza, and we'll be covering what else? Oh, we'll be covering the GDP report from this morning to see what were the biggest winners and biggest losers in the economy. Which sectors had the best success? Which sectors had the worst? And let's see if we can do something productive with that. All right. So UJ, same exact strategy that I use. Same strategy I use on NASDAQ, but I just use this on USD JPY. We had a beautiful 78 rejection. I'm really thinking that USD JPY has a little bit more room to go. 139.6. We bid this thing up. And then we start 2024 bullish. This is my expectation. It's the same thing that I see for the dollar. A little bit more room to go, and then push back up. Very simple stuff. All right. So if we have an equal size move, there's two options here. An equal size move would mean, oh, don't do me dirty like this. Where is it? Okay. An equal size move would put us all the way down here. 1.27 and 1.61. All right, so if there's no pit stop at the 88.6 and we just continue to break under, I'm not going to take any buys. If we reject the 88.6, I'll scalp some buy, I'll scalp some buys here inside of this range. If we just break through, then we're most likely going to hit these next levels well below the zone. Okay, in which case, I'm not going to take any trades here. The only sells I see are at 16,855. That might happen later in the session. And then I'm going to try for buys at 620, but I need to see a rejection first. Otherwise, we could just get this thing could just steamroll right through the entries. So don't rush any trades, especially with the last week. I have a payout date on the 30th with FTMO, and I have another payout date in January. So for the December payout, I'm not even trading that account anymore because I just want to lock in that money and make sure that that money is secured. For the January payout, I'm still going to trade on that account and see what I can do and see if I can, I know exactly how much I'm willing to risk on that account. So I'm going to take a few more trades to end the year. Be selective. And then this is a question that I told everybody on the masterclass yesterday to start asking. Before you take a trade, a gambler is going to ask themselves, how much money can I make on this trade? A risk manager is going to ask themselves, how much money can I afford to risk on this trade? So from this perspective, I'm going to look at this position. And once it gets here, I'm going to ask myself, how much money am I willing to lose? Now, as part of my trading plan, I keep it consistent. I'm going to do a 0.25% risk. Then I have to look at the actual technicals and ask myself, if this trade doesn't play out, is this a trade that's worth losing money on? So if this trade were to violate my stop loss, is this a trade that I could justify later? Like after the market closes, I can come back and say, nope, that it crossed every single line that I needed. It fit all the descriptions. Every one of my criteria was met. And this was a trade that I was comfortable risking money on. So that's how you can start to curate your selectivity in trading, which is how you have a good win rate, is just being way more selective with the trades you're taking. None of these kind of like maybe it'll play out, maybe it won't. Really, you just take trades that fit a very, very clear criteria with multiple confirmations. The 88.6 is at a gap. The setup is looking good. There we go. Now, y'all, I know that I've canceled a lot of meetings this week. I do have to focus. There's a ton of things happening. And I really wasn't expecting to still be doing coaching this late in the year. My number one priority is to make sure that we have everything squared away for 2024 so I can give the coaching students my full undivided attention. So if I had to cancel meetings this week, don't worry. We're getting everything set up for 2024. Q1 and Q2, I have never been this excited for a year. All right. I thought I was excited for 2023 because we had so many things on the menu. We're going to do a world tour next year that's going to knock everybody's socks off. The last time someone actually did a world tour that actually reached this many traders was IML. Ugh. Except instead of going city to city to convince you to sign up your friend, for Forex, and now nobody's trading. We're going to go around and host free events, bring out the best traders from every city, and host a free seminar in every city that we visit so everyone can have access to quality information, whether you can afford to or not. And that is going to be the big difference. We're going to capture the world by storm. I want to see everybody show up. If we hit your city, I want to see you guys come out and bring some friends. And that's just what I'm the most excited about. Okay. Let's go through this real quick. We have London session consolidation. So normally we would look at this entire area as our consolidation zone. And I would still like to, I'd still like to see the 88.6 get hit down here. However, because we're still I taught the model in the NAS100 masterclass, and if we just look for that model specifically, we actually have phase one here, the pre-New York consolidation. We had the first fake above, and then we've just broken through that liquidity to the downside. So is there a chance that the market just recovers from here and starts going up? Because we've already completed all of the phases. We have already had that phase one. We have that phase two. And now we can see the phase three. That's possible. I would personally like to see a retracement back down to the Tokyo lows. And if we don't go back down to test those, let it go. Here's the reason why I'm fine missing this trade, even though it's very obvious that the market is rejecting here. This trade idea is about a 3-to-1. And we can even get away with a smaller stop loss. We can go 3.8. Let's just call it 4-to-1 to make it easy for this example. If I took this current entry, it would be about a 1-to-1, 1.3-to-1. That's the difference in this trade. So I'm not looking at this trade in terms of this, which is what most people would do to take this trade. If I was to take this, my stop loss would have to be all the way down here. And because of how wide the stop loss is, I'd have to use a much smaller position size, and I wouldn't make nearly as much. Okay? So personally, that's why, even though this is a great trade and it crosses all of those different facets, it does not give me enough confidence because we have not hit the low of the range. And that's the best optimal place to trade. Big piece about having a system is if the market does not give you the strategy, if it doesn't show up, don't just take a random trade. Ain't that crazy? Nana says, Roy, thanks for the advice. I'm also down 4%, looking forward to building back strong. You guys know the drill. Hashtag build back better. The only way to build back an account after a massive loss is one step at a time. Everything in your body is going to tell you just recover the loss as soon as possible. Whether that means over leveraging or over trading your way back, just so that you don't feel that feeling. But instead, what I would urge you to do is to stay strong in this moment and to double down your focus on quality trades only, being very selective, and then that's how you're going to build back. Next thing you know, you'll be right back up. My number one recommendation is that if you have a strategy, stick to it, the 88.6 thing. Once you have that, please don't over leverage. Stay patient. You have time. That was Jamil, who just passed his funded challenge and just got his payout. That was his advice for folks to be able to have that same level of success. Price just hit 88.6 on the bullish impulse. Justin, I saw it. Roy, did you read the Candlestick Bible book at the beginning of your trading career? The answer is yes, I did. Would you recommend it? Thanks for taking time. Okay. So what I would say, Ridge, is instead of reading the Candlestick Bible, go through the market itself and ask yourself every single time that the market reverses, what candles does it form? What candles is it forming when it reverses? And just look at that and skip the Candlestick Bible. It's a waste of time. Just look at this. Every single time that the market is about to reverse, what are some similarities? And what I personally found is that W's and inverted head and shoulders are the most valuable patterns to learn. So you can have double bottoms, you can have inverted head and shoulders, you can have inverted head and shoulders, inverted head and shoulders, double bottoms. Not much going on here, even though there was a left shoulder, head, right shoulder. Double bottoms, double bottoms, double bottoms, double bottoms, right? And so when you start to look at it like that, you don't need to just keep looking at a book that somebody wrote 20 years ago or 30 years ago. Look at the past 100 trading days, and that's going to be all the info you need. Most people are just not confident in their own eyes, which I feel like this is why it's so easy for news and for markets to just manipulate people, because people just don't trust their own eyes. And so what I would urge from everybody is Trust what's right in front of you. When you go back and you backtest and you see this same thing over and over again, your eyes are not lying to you. Most people literally have zero confidence in what they're seeing in front of them. Like they'll see something in front of them and then they'll be like, "No, but this study told me that this thing is happening," and not look at the objective evidence that's right in front of them. So I'm going to tell you guys, to be a great trader, you have to trust your eyes. You have to trust your own perspective. And if you guys, you have to curate that. Go through and just look at the things. And I'll just give you a very easy cheat code, right? This is a cheat code for all of you to get started in your backtesting journey. That W's take you up, right? This was about to change somebody's life. And M's take you down. Okay? If you know two letters in the English alphabet, W's and M's, you can make money. So why am I always looking for deeper retracements? Because W's take us up. Why am I always looking for some double top formation here? Because M's take us down. And if you can learn those two things, you'll be a much, much better off. All right, put a 1 in the chat if that makes sense. Roy, thanks for the advice. I'm also down. Yep. Went right through that 886. Yep. Roy, any thoughts of courts unfreezing the $100 million of funds from my Forex funds? So I actually covered this on a few streams ago, saying that in this space, if you have enough money to pay for high-profile attorneys, you can beat a lot of these cases because a lot of these simulated prop firms incorporated themselves correctly, right? With the way that their structure is, with the way that their corporate structure is, the shell companies registering offshore, et cetera, they've done a pretty good job. If this becomes a serious issue where the right people, or sorry, the wrong people, are looking into this space, it's going to get much worse. So right now, I think that we all dodged a bullet because it was not that big of a deal. It probably landed on some junior investigator's desk at the CFTC. So this didn't have a lot of implications. What I'm hearing from the industry itself is that things are slowing down. People are buying less challenges right now than ever before because everyone's kind of waiting to see which firms are the best, where's the best place for me to go put my money. As there's a seasonality effect to it where people are trading less towards the end of the year. And so I think it is having an effect where people are waiting for some regulatory clarity to figure out what to do in 2024. Here's what I would tell you guys. The reason that I focus mostly on education, I try to stay away from the brokerage side and all these things, is because regardless of what comes next, the basics of how you make money trading are that you need a positive expectancy system, a good strategy, and then you need emotional discipline and emotional maturity so you don't fuck up the plan. And so while all of this uncertainty is happening, I urge all of you to use this time to build either your confidence in a strategy or to build your emotional maturity and emotional discipline so you can continue to apply that strategy. So no matter what platforms we're trading on next, you'll still be able to make money. Okay? Prioritize the universal things that will never change in trading. All right, y'all. So this is the examples, very similar to what we covered yesterday. We had London session create that consolidation. We had the fake up. We had the fake down. And then the entries could have been on the way back in and then on the retest of the 88.6. All right. Personally, like I said, with this much room below an entry, I was not going to take this trade. And so what I would personally like to see is now we can go back up to a higher time frame. So as we start breaking back above buy levels, this is going to give us some confidence that the market is still headed in the right direction. Even though we had this little liquidity grab through, we managed to break back above this support level. And so I keep going up and I find the next support level here. The market broke through it, but has not decisively been able to stay above. If we can decisively stay above this level here and start using it as a new floor, then that's going to become that new support. In which case, now we go for the next one. Okay, if we can meaningfully stay above, we're going to use that as the new support. and we'll just keep doing this and building. This is how we can tell if the market is respecting the bullish trend or if it's just coming up for a retracement before it drops again. It's if the market can stay above these support levels. So I'm just going to mark those off. I have my higher time frame zones already marked. And the two levels I need, once I've established a high and I've established a low, the only two levels I need are the 88.6 on both sides. This is just kind of for my masterclass folks, if you guys know this. So that's my 886 on this side, body to wick. Quick cheat code, just reverse that around. We have another level at 620. I'm going to keep it at this level right here. The low of Tokyo. Right there. All right, let me see. Took profits already. I'm still trying to get in this groove. I'll get it. I'm a slow learner. There's no such thing as like take your time learning it so that you don't waste time blowing money and figuring it out and all this stuff. It's okay if you take a year or two to learn a strategy. Like there's no rush on that. The only thing that there's a problem with is that if you rush into the trading side without the proper education and you just end up keep resetting the clock on yourself. Um, I got slapped yesterday on that move down. I got to build that back. Well, the only reason you'd have to build that back is because you over leverage, Roman. No trade, win or lose, should have a significant impact on your profit and loss. It should just be another move either in the right direction, so a positive trade or a negative trade, profit or loss, but it should not be significant enough to feel like a slap or to feel like it took a chunk out of your account or whatever it might be. Hey Roy, is the bonus session uploaded? Last I checked, I didn't see it. No, it hasn't been uploaded yet, but it will be by the end of the day. I would suggest focusing on the live trading right that's happening right in front of us and not so much on that review session because the learning experience is happening right in front of you in real time. So instead of thinking about something that's over there, focus right now and be deliberate so you can actually take some information away from this call. So you don't need to worry about the review session. Too many zones for now. I'm just going to keep it as clean as possible where I just have my lows, my highs, and my midpoint. Okay, so for the masterclass folks, here's my support. My discount is down here. Okay, so if this is going to retest, I'm going to retest the support. The discount is down here. We have resistance right there, and then we have our premium. So we have everything we need. We got our lows, we got our highs, we got our max points right here. And beautiful. All right, I'm going to run to the restroom real quick just to make sure I don't miss this move when it finally shows up. I'll be back in just a second. If you have any questions, post them up in the chats. I'll answer everything right when I get back. And of course, we're going to cover those fundamental news events, such as the updates on Colorado removing President Trump from the ballot, and California and a few other states looking to follow suit, as well as states like Texas and Florida looking to do the same with Biden on their ballots. And this has become a giant shit show. So we'll cover that as well. We'll look into the GDP report that released this morning at 8:30. And then last but not least, we're going to cover some very important news regarding China, telling President Biden that they have every intention of taking back Taiwan, which is very close to World War III territory. I'll be back in just a minute. Leave your questions in the chats and we'll cover those just when I get back. All right, we're back. Back. Something fun I've always wanted to do is show people the power of coaching and show people because a lot of people ask us because we offer individual coaching sessions, 3 individual sessions or 5 session coaching. People ask me how much can actually get done in one session or two or three. So what I wanted to show you is if anybody's comfortable with this, if you guys want to present me like kind of your situation, I can see if I can give you some help here in about 5 minutes or 10 minutes that could completely turn your trading around. So I'm going to offer this to the Chart Addicts members who are in the chat first, just to show you guys the power of really the power of having an informed participant look at things from a third person and be able to give you an outline of, what's really happening here. So I want to show you guys the power of that. If anybody's comfortable with kind of just presenting their situation and seeing how we can help you out, that'd be awesome. That'd be great for the rest of the group. And if nobody from the Zoom call wants to do it, then we can just find some. And I won't call your name out if you don't want me to. So if you guys want to message me privately in the chat, we can do that as well. And I can just show you guys, you really don't need to reinvent the wheel. Sometimes it's just about very clearly identifying the weak points and the strengths so that you can have, you can actually make some progress. So we've established a new floor here. We have that liquidity grab through, break and retest. Prices are closing above the 886. We're 3-1. It's a good 3 to 1. I won't take it only because we're way too high above that daily zone, but this is a pretty good trade. And I hope that this shows all of you that you can become very skilled at technical analysis and you can start to identify trades no matter where they happen, no matter where they're at, you can start to identify them. But then you have a choice, which is, do I take every trade that I see, or do I only take trades that fit my high probability criteria? And so for me, if I told myself I'm only taking trades from the daily lows and I see this opportunity, I can mark this off and sharpen my skill and make sure that I'm paying attention to candles and making sure that I'm looking at structure correctly. But it doesn't mean I have to take every trade that I find. That's a losing battle, and that's how you start to give back a lot of the money that you're making in trading. Is this your last week trading, giving the market makers are going on holiday and there won't be much volatility? That's adorable. You guys think the market makers are somewhere in a pit right now pressing buttons and moving the markets? This is all happening algorithmically. Algorithms don't go on vacation. Now, the only thing that's different is that the stock market, US equity specifically, a lot of their inflows just comes from pension funds and 401ks. Every 2 weeks when people get paid, a portion of that is automatically taken and invested. So whether that be in a pension, if you're a teacher, if you work for the government, if you're a firefighter, if you're a police officer, if you work for a private company, you're typically invested in a 401k, which the majority of it is going to be in stocks and bonds. And so the stock market just sees these constant inflows. So if you guys took the NAS masterclass and that chapter was titled Stocks Go Up, it's because of the amount of money that is invested in stocks just from regular inflows. Towards the end of the year, you can see a lot of investment firms don't invest as much. They wait for the new year, and that's where they start to really pile into some of these investments. So there's still activity, not as much as there was before, but don't think that the market makers are on break or whatever, because really the algorithms are the ones who are stabilizing the market, who are pushing liquidity through at certain key times, and it's not really a market maker decision. The hedge funds are going on vacation. The high frequency trading firms are going on vacation. So you're right, there will be less activity. Will you please consider extending access to the Discord for a couple of months? I want to stay connected to this group. I want you guys in. Don't get me wrong. I don't want to kick anybody out, but we do have to value how valuable this group is, the accountability, the informed opinions that are going around. This is a pretty solid group. And I understand that everybody wants to be in, but we have to figure out a fair way to make sure that, you know, you get access. I don't know. We told everybody on the review session that if you were to recommend a friend to the masterclass, that'd be one way that we could recommend that we could extend access. That way you could be in the group chat with them, helping them out and making sure that there's some collaboration going on. But just extending the access to the chat, that would just be disrespectful to us. We're trying to find a middle ground here. I'm the kind of person that's just like, hey, let's just open up access again. And then we have to kind of think about pros and cons and be like, all right, we got away from that because people don't value things that are free. People don't value things that are always around. As soon as it gets taken away, you start to realize how valuable it was. And you're like, oh, okay. And so we really want to make sure that people are respecting how valuable the strategy is and the environment that we're building, because it's very unique to have a place that's only focused on trading. And that's not just only focused on trading, but it's filled with people who are competent and who are committed to trading. You might have one of those, you might have a lot of competent people, but they're just kind of, they're not really here to help anybody. They're not really looking out for anybody but themselves. Then you have other folks. Nathan says, Roy, what did you say about giving the masterclass members the chance first at a phone call and I missed it? Yeah, if you are a masterclass member, so if you guys took the masterclass and now you're in the Discord, if you recommend any friends to the NAS100 masterclass, we can extend your Discord access, the community access for 3 months. That's a fair way to do it. For clarification, when we pay for the masterclass, we have a time frame for access to the Discord. Not when you pay for the masterclass, it's when you graduate. So once you get your certificate, then you have a 1 month free access to the Discord chat. So you can continue learning. You can continue seeing these trades every day. You can see the market outlooks where we prepare and look at trade opportunities for the next day. And you guys will have access to that collaborative environment to ask questions, post your charts, post your results, get feedback. And I think that that's a very important part of the journey for most people, is that immersion, immersing yourself around successful traders so you can make rapid progress. A lot of people just they took the class, they watched the 3 days, but they never finished their final exams. That's not the kind of individual that we really want in the group chat, because you don't have the, I don't know, it's the discipline or the desire to have gone through everything you're supposed to. And so that's not the kind of individuals that we want in our community. It's really just folks who are at the top of, like, who really want this thing. I'm taking the master class. Walter, you're a lifetime member at this point, brother. All right, let's just go ahead and say that you are a lifetime member. Not that something about sharing their story. Oh. Yeah, if someone wants to share their situation, so you tell me, what account you have or what situation maybe you just blew an account. Tell me what some of the issues are that you're dealing with, and let's see if we can give you some advice in the next 5-10 minutes that could change your life. I'm very confident that I can change anyone's trading in a 5-minute conversation. And I know that that sounds arrogant, but which is why I would like to display it live in front of everybody. I'm all for challenging myself. We spent like an hour yesterday talking about support, talking about 1, 2, violation, retest, and pop. It's 1, 2, violation, and then continue. Patience pays, people. Patience pays. It's better to miss a trade than to chase a trade. So I have my zones already marked off. I'm going to wait for those zones to get hit. And yeah, should be a pretty straightforward trading day today. And yeah, also anybody who wants to submit their situation, and if you guys just want to put up basically what is happening in your trading. If you just lost an account, you just gained an account, you just passed the challenge, you just failed the challenge, you're down 8%, you're up 8%, and then just tell me what are some of the things that you're going through, and we can potentially get you on the right track here in just a few minutes. So whoever wants to take on that take on that spot, I'd be more than happy to do that right now. Drop a like and hit subscribe if you guys are not already subscribed to the channel, to keep up with the morning live streams, which we do every single day. We have about 10 days left in the year, everybody. We got about 10 days left in the year. We've been streaming for 90 days consecutively, 90 out of 100 streams. These next 10 days, they count. Tomorrow, I'm going to be flying out, so I might have a very early stream while I'm at the airport, or I might have a late stream at night after I get back and I land. I'm going to fly out, go see some family, and so tomorrow is going to be tough. But when I promised you guys 100 days consecutively with no breaks, that includes Christmas, that includes Thanksgiving, that included Halloween, all of them. We've been streaming on every single day, and I'm going to show you what discipline looks like by continuing these next 10 days strong to finish the full 100 days in a row. And then, of course, you guys think I'm going to stop in 2024 after having this much fun on these streams? We're just going to get started. But hopefully this is a master class in showing up every day, because you guys know it might be a lot easier for me to trade if I can just mind my business. Right now, I'd be at the gym with my alerts set. It's either going to hit this top zone or this bottom zone. And if it doesn't, I'm going to move on with the rest of my day. But doing these lives has been, for me, it's been unbelievably valuable, just having fun, being able to challenge myself and being able to connect with so many other traders. And so we're going to keep this show rolling. Drop a like and subscribe so you guys stay in touch. throughout this whole 100-day journey. And on the 100 days, we might do something very special on New Year's. We might do a New Year's charity stream. We might bring on all the biggest traders in the game. They'll be drunk somewhere. They'll just tap into the stream, and we might just have a New Year's stream. We'll see what happens. I know a lot of folks are going to be doing stuff for New Year's. I'm going to be doing stuff for New Year's, but I'll try and stream regardless of where I'm at. Okay. What's up, Roy? I was sick like a dog, but I was able to speak with Jacob, and it was a great conversation. Carlos, Jacob is one of my guys. All right, he learned this strategy, and the benefit is that he never went to another course. He just knew this strategy. And I lived with him in Richmond. We didn't actually live together. He was down the street. He was just committed to it every day. So he actually was full time. He went into the nursing programs. He had a 4.0 GPA. He was always working his ass off, but he knew that that wasn't the right track for him. And so he really committed to trading, didn't have any bad habits because he never went to any other courses, never knew anything different, and was just able to commit to it. 6 months later, 1 year later, he's having payouts from FTMO. And now, payout after payout, Jacob is absolutely crushing it. And really just one of my most proud success stories is having folks that took the class, really committed, understand how to trade now, and are just making a difference in their own life. That can't be beat. I blew my 10K funded, and I'm in 50% drawdown today. The news wicked me out. Then I was on tilt revenge trading. Okay, we'll go through these one by one. So MSS Messiah. Bro, does that say Messiah? Are you trying to call yourself Messiah or what? Or is that your real name? Golly says 50%. Golly, relax, brother. I know. All right, let me cook. I'll go to one that's a little bit more clearly defined. I most recently was funded and I breached my first payout. I think it was mainly from trying to force my trade and trading what I thought would happen and not what I was seeing. Also, not having a set strategy that I follow for each trade. Crystal, can we be honest with ourselves? You just identified the problem and the solution. So what you need to do is the people that are great at identifying exactly what happened, but find themselves still making mistakes is because you have not written down that lesson into some kind of rule. For me, what I recommend to everybody is get these sticky notes. And then whenever you have something that continues to come up, whether it's forcing a direction. So back in the day, I would be forcing buys. While this thing is dropping, I would be forcing buys. And this was my story year after year, every time there was a massive crash. And so something that I would write in my rules is trade with the trend. Don't guess when it's going to turn around. Don't try to, catch a falling knife. When a knife is falling out of the sky, just like this, putting your hand out to try and catch it, it's going to get you hurt. The knife is going to hit you. Wait for the knife to hit the ground. Okay, this is the knife hitting the ground right here. All right, wait for the knife to hit the ground, and then we can pick it back up. So when you have these things that are very obvious to you, Crystal, so you breach an account because you were forcing a direction. There's two problems here. Number one, you can't blow an account if you have proper risk management. So it's not the news. It's not trying to force a trade. First things first, even if you forced the trade, and even if you traded news, and even if you made all the mistakes, but your risk management was in check, you would never have blown the account. So let that be the first lesson that you write down. All right. Over leveraging is fun and games until you're in drawdown. Okay. So find out what percentage can you afford to risk and never lose the account. Number two, not having a clearly set strategy. That's the easiest one to conquer because you can put that at the very top of the list as your rules. Trade your plan and plan your trades. So now when you wake up in the morning, instead of just jumping onto the charts, you're going to look at your sticky notes. The first one is going to say, plan your trades and only trade your plan. And then the second one is going to say, you can't get rich blowing your account. You'll never get rich over leveraging. It might work once and twice. And you have to write this in a language that you understand. All right. For me, my biggest pet peeve is starting over. And so one of my rules would say, over leveraging is the quickest way to start over. Now I'm like, oh my God, I'll do anything except for over leverage. All right. So whatever way you have to articulate the rules, do it in a way that speaks to you. I'm currently on a 10K funded account. My account is now sitting at 9,300. My losses are eating my wins. Do you know your risk and reward ratio? Do you know how much you're risking and how much you're making on average? And if so, what is it?
Drago, get you another cup of coffee, my boy. You'll be good.
Roy, my mind's broken. Have not been able to trade well this week, but slayed last week. He said, get another cup of coffee. Brother, take your take time off the charts. That's my biggest piece of advice. Whenever you feel lost, whenever you're stuck, whenever the market is just not playing according to your rules, take a step away from the markets, take a whole week off. You're going to come back feeling so much better and you're going to feel much more confident in your ability to see what's happening. When you're too lost in the sauce and you're too fixated and you're too in the game, it's hard to look at things clearly. And so get out of the clouds, get out of the haze, go back to the outside and just look at things from the outside. You can delete your MetaTrader app if that helps. Whatever you have to do to get yourself in a place where it's not even an option for you to trade, and then watch everyone else trade. Look at people making mistakes, look at people talking about their accounts, look at people in group chats being like, "Oh, I just blew this, I just made this." And then you get to see it from a third person point of view and be like, "Huh, I hope I don't look like that." Right? So make sure that you take the necessary breaks to be able to continue to think clearly. So Abyss says 1 to 2 risk and reward, but 1 to 1 most of the time. There's a very big difference between 1 to 2 and 1 to 1. Which one is it? If you know your risk and reward ratio, it's not about what you're aiming for on the trade. It's when you open up your FTMO metrics, or when you open up TradeZella, or when you open up MyFX book, it says clearly at the bottom your risk and reward ratio, your average risk and reward, which is if you were to risk $1, how much based on your results can you expect to make? There's a very big difference between 1 to 1 and 1 to 2, guys. Huge difference. And I'm gonna stick here with this one, just to go one story at a time, because I don't want to just bounce around too much. I want to make sure that we attend to what's really happening here and get to some solid conclusion. Crystal said, "Thank you. I completely agree with risk management. I'm also buying your course today." Crystal, very smart move because it all starts with being confident in what you're looking for. Once you know what you're looking for, it's not that hard to wait. And also, once you know what you're looking for, it starts to show up a lot more often. I always tell people this in terms of relationships. If you don't know the ideal person that you're looking for, how are you going to know when they show up in your life? This goes for men and women. If you don't have a clear idea of who you are looking for or what trade you are looking for, how are you going to know when it shows up? So that's the first step, is have a clearly defined strategy that you can trust and that you're confident in. By the way, if this holds support, it could continue to push from here. If this holds support, this could actually be a great entry, a re-entry. We'll see if it holds. It's going to come back to retest this box. If it wicks the box and rejects up, this could actually be a pretty good entry here for a good 3.5 to 1 R. Now, if I take this trade, and here's the calculus I have to do in my mind. If I take this trade and I lose, will I retake the entry here and make my money back? I have to decide this from now if I want to take a low probability trade. And so for now, I'm thinking that that is too much. That's too many different trade ideas. I'm going to paper trade this which means I'll watch it play out. I won't be involved. But if it breaks through it and hits the zone, I will enter a live trade at this high probability zone. So I use some of these opportunities as a way to learn. So this current buy and sell order that I put up right here, this is more of a paper trade. I'm just seeing, will it work out? But I do have zones that I've very clearly identified that I will take a live trade if the market hits here. So that's the difference, is that you can identify trades, but you don't have to take every single one. Okay. Oh, I see. On the funded trader, it says 1 to 66 or 1 to 0.66. Okay. So this will tell you why your losses are eating up your winners. Because for every $100 that you're risking, you're only making $66 back. So the easiest thing for you to do, and the most important thing for you to do, is to switch that ratio around. When you open up your MetaTrader, you should set a maximum loss for every trade so that you keep your maximum losses small. And then you should start to understand if you're taking profits too soon or if you're not taking profits soon enough, and which one of those will make you more money. Here's the exercise that will tell you exactly which action is best for you. Take your last 20 trades. Okay? Take your last 20 trades. Look at the results that you had on all 20 trades. And then on the other side, go through one by one and see that if you had held the trade to the intended target, to TP1 or to the final TP, wherever you're supposed to take that trade. And if you did that over and over again, how much money would you have made? And compare. Some people, what they'll realize is that they're holding trades too long. They'll do the 20 trade exercise and they'll realize that if they just started closing profits every time they were in blue, they would be a lot more profitable. Now, another trader will do the same exact exercise and realize that they should start holding their trades longer because they keep cutting their trades soon, or they keep cutting their trades early, and then later the market goes their way and it flies for 10 to 1 R. So the only way to genuinely know what's right for your account is if you go and take those 20 trades and you figure out which action is going to be best. In terms of fixing the risk and reward, there's only two ways to really improve your risk and reward. Number one is to get better entries, and number two is just to hold the trade longer. Now, holding trades longer, that's putting too much faith and confidence in the market. And so what I prefer to do is I prefer to get better entries. So let me show you this real quick. If I enter this trade at the current price, I'm not saying I'm going to enter this, but if I enter it at the current price, my risk and reward ratio on this trade is 3.2 to 1. So for every $1,000 I'm risking, I'm going to make back $3,200. Now, let's say that I wait for the market to wick up and I get a worse entry. Now my risk and reward goes from 3.2 to 1.5. So instead of making $3,200, I'm only making $1,500. Now imagine I keep chasing the market. So I waited for this thing to push up, and now I'm getting a less than a 1-to-1. That's going to ruin my risk and reward. So the first step to improving risk and reward is to making sure that you're getting the best entry possible. The difference between entering at this support and then waiting for the wick rejection is the difference between a 3.4 risk and reward and a 2.2 to 1 risk and reward. This is such a subtle thing that kills traders, because you'll win a bunch of trades and you're like, why am I still in break even, or why am I still in drawdown even though I keep winning trades? You're not realizing that you're chasing, and so the risk and reward is messed up. When you lose the trade, you're losing the full trade. When the market goes your way, you're either cutting it too soon or you're taking partial profits. But you're not taking partial profits when it's in drawdown. You're only taking partial profits when it's on the way up. So you're getting these small wins, but then when the losses hit, it's a big loss. So number one, get better entries. And number two, make sure that you're not sort of chasing these trades. I see, I wrote your advice down and I'm doing it now. Perfect. Do the exercise and you'll have the clear answer of which one's going to be best for your risk and reward. Deal? Now, ladies and gents, that was slightly above 5 minutes. And I'm not saying that right now this individual is cured of all their problems and all the things that may be getting in their way. But do you feel bis that you now have a clear plan of how to figure out what's wrong? Do you feel confident in your ability to now identify how to improve your strategy in just these 5 minutes? And if not, it's perfectly fair to say no. But I just really want to make sure that this was valuable enough to actually get you on the right direction. Says no, but I feel more guided. Okay. Well, if we could go through and actually look at those results piece by piece, I think that I'd be able to help you identify exactly what's going wrong. But if you know that it's your entry or really, yes, you know what? I'm not even going to let you get away with that dumb shit. No, you do have all the tools that you need. Because if you go and look at your MetaTrader history and you go and draw those trades, after 20 trades, you'll be able to identify whether or not it was your execution, whether it was your stop loss, over leveraging. You'll be able to identify exactly what it was. So to be honest, you do have all the tools you need. The question is, will you do the exercise? Most people will not do the exercise. That's the difference. It did clear a lot for me too, and I guess there is a lot of others like us who benefited from this risk and reward ratio advice too. Of course, those who are paying attention will benefit. Those who are like, "Oh, that's someone else's problem, it's not mine." They're ignoring, they're ignoring the real takeaway from that. But it's all good. As long as it helps somebody get into the right direction, direction is more important than speed. We can still we're still making progress. When you're too close to the wall, you won't be able to see what's written on the wall. Sometimes you need to back up a little and see it clearly once again, for sure. Thanks, mate. I'll go eat coffee beans to stimulate my mind. Golly, he said he's about to go eat coffee beans to go get his mind right, bro. You see what you're doing out here? Golly out here with the fucking prime time advice. Prime time, telling people to eat coffee beans. He said, I closed too early, which keeps me at a one-to-one risk and reward, which is why I'm at a break-even stage in my journey. I already know what I need. I already know I need to hold longer, but how do you build psychology to hold the trade longer? Get a better entry. I can't tell you guys how to become Gandhi, right? I can tell you that I eliminate a lot of these problems by just being a better trader. If I get a better entry, I really don't have to have that much mental strength for drawdown and all this stuff because I'm just not spending that much time in drawdown. So if you're at a one-to-one risk and reward, I just showed you the difference between a one-to-one and a three-to-one is how good your entry is. So if the market is always hitting the previous high and then reversing, and you're like, oh, I just have to start holding it past the previous high, that doesn't make that much sense either. Okay, so there's two ways to build confidence in holding longer. Number one is backtest. If you see the same thing over and over, if you wake up and you see a bird go through, it hits a wall, brushes its head off, and then goes straight up every day. And then another day, it goes up, hits the wall, brushes itself off, and then just flies straight up. And every single day you see that. And you just sat there in the park for a day, you saw it happen like 30, 40 times. Aren't you going to be pretty confident the next morning when it shows up, you see a bird and it's about to hit the wall? You don't really need to see it hit the wall in order to guess what's going to happen next. And so the first thing I would tell everyone is that if you're not sure about a strategy, I can guarantee that you have not done the backtesting. I can promise you this. Because every person that told me that they did the backtesting and they say that they are not confident is lying. Here's how I know you're lying. If you see something 20, 30, 40 times, no matter how stubborn you are, at some point, even the most stubborn of all of us will go, you know what? Maybe there's something there. So if you have a clearly defined strategy and you've gone and backtested it enough times and you saw that it'll hit TP1, then it'll reverse, right? It'll reverse a little bit, and then it'll go to TP2. Now you're starting to build confidence to know it's not going to move in a straight line. If I want this thing to end up here, am I ignorant enough to think that it's going to end up in a straight line? No, because I've seen it enough times to know that if the market wants to end up all the way up here, it's going to go in waves. It'll go in my direction, and then it'll retrace all the way down, and then it'll go in my direction, and then retrace about 60% of the way down, and then it'll go almost to the target, retrace all the way back to the entry, and then hit the target. At no point am I stubborn or am I ignorant enough to think that the market is just going to go in one straight line. On rare occasions, can it? Yes. On most of the time, will it? The answer is no. So the more back testing that you do, you can start to build your you can start to have repetitions in the market and build that collective memory so that when it shows up again in the live environment, you kind of have this intuition that leads that confidence of being like, bro, even if it doesn't hit TP1, I know I'm doing the right thing. Because when I back tested it, 90 times out of 100, it respects these zones. So number one priority is back test to the point where you're sick to your stomach. You're like, I get it. Once you've hit the Roy, I get it point, like, I don't need to keep seeing this, bro. I get it. That's when you're going to start to spot it in the live market environment. That's where you're not going to hesitate to enter a trade when it's there, and you won't have any emotional problems holding the trade because you've seen it so many times. Put a 1 in the chat if that makes sense. Repetition is key. All right. This might be a silly question and a bit off topic, but I was curious why the price of NAS is significantly different on Bloomberg than it is on TradingView and MT5. It's like 200 points off. Well, the reality is that every single exchange quotes prices differently. And that's the kind of competitiveness of these different exchanges. And so Oanda is a CFD broker, which means that it's quoting me not the futures price, is not quoting me the aggregated index price that they show on the NASDAQ stock exchange. It is showing me the CFD price quote, which means that their liquidity provider is giving them all of the price quotes. They're averaging them out, and they're just giving us the average of Oanda's liquidity providers. So there is going to be a difference, but that's why I trade a lot of structure. And if I'm going to trade on MetaTrader, what I do is I just match the prices. If I see that it's at 722, but MetaTrader, for example, is at 720 or at 690, excuse me, I know that there is a 30-point differential. So then I look at the market structure and say, is the market structure the same? Is the market holding support? It's still holding support. If I want to buy at that floor with a stop below the wick, what I would do is I would buy at the red line with a stop below the wick. Does that make sense? So you can figure out how accurate it is and then look at that differential. I got closed out of my runner, which kind of pissed me off, if I'm going to be honest. I had a runner sitting from down here at 550. Market came all the way down to hit my break even, and then I saw that it recovered, which is why I still have a feeling that the bullish market is intact, only because we just conveniently went down to those lows and then started to push back above. Very convenient here. Okay, let's see if there's more questions here that we can go through before the stream is done. Morning, Dwayne. Okay, yes, that makes that makes perfect sense. Thank you. Ken says, thank you so much, Roy. I need to go now. I'll watch the rest tomorrow morning. It's 2 a.m. here. Have a good night, Ken. What's good, brother? Joining in for my vacation in Botswana. Okay, how's your vacation going, bro? Sounds lit. Da 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 da. Okay, I close early, which keeps me at 1-to-1. It's clear for me too, and I guess there's a lot of others like us who benefited from this risk and reward ratio too. Okay, thank you for all that, Roy. I'm taking notes. Needed to hear that. Love from Mexico. Viva Mexico, David. Viva Mexico. All right. I'm up 5% on a challenge, 6 days in with 18 trades on the account. 6 days in with 18 trades on the account. How do you feel about that, Elise? 0.5% to 1% risk per trade. Target is 8%. At this stage, how would you proceed? To be honest, if you're already up 5%, I would just keep doing what you're doing. But personally, I wouldn't do the 1% risk unless there's a time limit. If you can get away with a 0.5% risk, that's what I would personally do. Why? Because you're already up 5%. And so the question that I would ask on the live account, if I was up 5%, is how much of this 5% am I willing to lose in order to keep trading? So I'd put a limit on this. So Khalees, you're up 5% and your goal is to get to 8%. Most people don't care about the 5, they just want to get to 8. So they're just thinking about, how do I make 3%? The real question is, how do I make 3% without risking more than, let's say, 1%? So the worst that can happen is you're back at 4, and the best that can happen is that you pass the challenge. So this is a bit of a different math, right? So if you're risking a 0.5%, so 0.5 and 0.5, and you're looking to make back double, is that enough to pass the challenge? No. If you're looking to make back triple, okay, so 3-to-1 risk and reward, is that enough to pass the challenge? Yes. So you could be risking 0.5%, and you'll be looking to make 1.5% per trade. Okay? So you have 2 trades. This is how much ammo you have. You only have 2 to make that work. So that's not a lot of room. Now, what if you want to split that up even more? You can go 0.25% risk. Now you have 4 trades of ammo. But then you have to win all 4 instead of just winning 2 trades. Do you guys see how this works? So don't just think about how much, or like, is this trade going to help you pass it? Ask yourself, how much of the 5% am I willing to lose? Let's say it's 0.5%, 1%, 2%, whatever. Make that your absolute max. And then ask yourself, how many trades do you have? And then be very selective. If you lose a trade or two, that's fine. You can always make it back, but you have to be very careful about not giving back the money that you've already made. All right. Most people, especially with a live account, what they'll do is they'll sacrifice the 5% in hopes of making 8. And what they'll actually do is they'll start losing a couple percentage and then they don't get the payout. So I want you guys to practice good habits, practice good habits, practice good habits by looking at downside, looking at the downside risk. When I'm up for the week, if I'm up $4,000 and I see a great trade about to play out, I don't ask myself, okay, how much money can I make on these buys? I ask myself, how much of this 4,000 am I willing to lose, back to the markets in order to take this trade? And so let's say my answer is $500. It's 0.25%. So now I only have $500 to risk for the whole week. So today and tomorrow, I only have 500 left. I can split that up between 2 trades, or I can put it all in 1 trade. Does that make sense? Everything is from a risk management and trade management perspective. The daily engulfing candle on NAS is giving me a bearish bias overall. How about you? Well, we already covered the basics of highs and lows, but I'll do it again because I'm in a good mood today. I feel like education is important. And I understand that not everybody has a solid foundation. So this, don't get me wrong, we've engulfed the previous, fucking 25 candles. So this is definitely a bearish sign. But when we look at market structure, we identify lows. Okay, we just keep identifying floors. And I look for the body mostly. I don't really like to do the wicks. So let me be clear here. The bodies. So even though we're having a lot of these dips and a lot of these dips that come down, are we still creating higher floors? Technically, the answer is yes. Are we still creating higher ceilings? The answer is yes. So by dictionary definition, this is still a bullish trend. If we violate these lows and we break under, is it still bullish? The answer is yes, because we're still creating a higher floor as long as we stay above this low. And so once we break through this next level, I keep going from floor to floor. Because in a bullish trending market, the market will retrace, but as long as it's still creating higher peaks and higher floors, the trade is still valid. Now, when does it shift? Is let's say the market starts making lower floors, and then it comes up to retrace, and it's creating lower ceilings. Now we have lower floors, we have lower ceilings, and that could be a potential turnaround scenario. So just look at structure as clearly as possible, and that's going to tell you if the market is trending bullish or bearish. I say this all the time in our classes, but the whole point of technical analysis first is to figure out which way the market's going. And if it's a bullish market, you want to be looking for buys. If it's a bearish market, you want to be looking for sells. So that's why I'm still bullish, because the trend is our friend until it ends. And right now, it looks like it's ending, but it has not ended yet. All right. Roy, I noticed that you placed the zero of your fib yesterday's high as opposed to today's wick high, like you taught us in the masterclass, especially from last night. Um, this is exactly how I drew my fib. Here's the low. Body to wick. But we also have the low of the entire range right here, and it's kind of, it doesn't really make sense to just pick off of this floor. So I drew it from both. So right here we have 638. That's the entry. When I draw it from this body, it's 613. So we do have a 20-point range here where the market could push off from. Now, because I draw it from the Tokyo lows, this is what we were talking about yesterday. This is where I'll be layering my trades. I'll start to layer here, and I'll enter trades here. Until we break these lows, the trade idea is still valid. So personally, what I'm waiting for here is I think it's going to blow through this 88.6 regardless. This one. And I think it's going to come down to test the lows, just to wick through. So either way, I'm going to be entering around this area between 620 and 640. This 20-point range will provide us tons of opportunity here. If there's no rejection at these zones and the market just continues to break the 88.6, I'll let it go and I won't force that trade if the market's too aggressive. Is that clear, George? All right, so party 42 or party 42 night. But what are you, 12? What kind of name is this? I have a 6K funded account. Please may you suggest the maximum lot size I can use. I currently use the 0.01 and 0.51. Is that too much? To be honest, I think that you're slightly misinformed about risk and you're looking at risk very wrong. The lot size doesn't matter at all. Like the lot size is related to how big your stop loss is going to be or your risk and reward. So what I would look at it, instead of looking at which lot size to use on your account, look at your risk in terms of a percentage of the account size. How do you have a 6K funded account? Who's giving out $6,000 funded accounts? What does that even mean? He said, "You are really in a good mood today." Yes, because I mean, to be honest, I've had I kind of cleared up my schedule and I've just had time to myself this week, and it's been the most, yeah, just the best thing. Really, just catching up on a bunch of stuff. I'm feeling a lot better. So yeah, instant funding account, bro. You couldn't pay me to take a $6,000 funded account because like, what's the max risk? It's $600, right? Well, actually, yeah. I mean, if you have a $600, if the 6K account, let's say it's like $50 to get funded, or fucking, it's probably even less, like $35. So instead of putting $35 in a MetaTrader account or in a unregulated broker, you can buy that $600 account basically. So I guess, yeah, still better. Funded next. Okay, not bad. So a percentage of the account, what's your maximum loss? What's your maximum daily loss and what's your maximum loss on the 6K account? And Party for Tonight is a party guide in South Africa. Man, I don't give a fuck. You feel me? That shit still sounds like a 12-year-old is running the social media, bro. Or somebody from the 90s. I know the stream is getting boring. I'm about to start wilding out here in a second. I'm trying my best. I'm keeping it all contained in the box, but might just let it fly. Need to go to work. Thanks for your time. Everybody take it easy. It's a slow ass day. Just go on about your day and don't waste your money. It's already 11:30, so I'm getting ready to hop off the charts here, but yeah. And again, if the market gets down here and there's no rejection, please guys don't force trades. Do not force this trade because if we have another event like this, which is likely to have another drop in a similar fashion, I don't want you guys getting caught up here. And so, two ways to minimize your risk. Number one is wait for the liquidity grab and then enter on the way back up. And the second way to make sure that you're prioritizing risk management is to split up your risk. So you can put in, let's say if I want to use 3 lots, I would do 1 lot here. And then if the market dips a little bit below, I can do 2 lots here. The beauty of that is if you enter the first trade and the market just starts to crash out of the sky, you did not put your full 3 lots right here. You only put a smaller position, so the loss doesn't really feel that big. And so you're still able to kind of maintain your composure and look for the next opportunity. Now, all prop firms, same 10% max and 5% daily. Yep. The maximum loss is 600 and the daily is 300. You got to start talking to me in percentages, Party 42 night. Everything is percentages. $600 maximum risk equals 10%. And the maximum daily risk is 5%. Okay? So what this means is if you're risking 1% of your account per trade, you can only lose 5 trades in a day in a row, or you can lose 10 trades maximum. Okay, now losing streaks typically come in 3s and 5s. And so you don't really want to be playing a game where 3 losses is going to take, the majority of your account. 30% of your account is gone. And so you want to make sure that you're using a percentage that allows you a lot more trades just in case you hit a losing streak. So 0.5% here, 1% would be $60. 0.5% would be $30 risk. So if you're risking $60 per trade, you're only 10 trades away from blowing the account. If you're using $30 risk per trade, which is 0.5%, then you have 20 trades. You can lose 20 trades in a row before you blow the account. That's a lot of trades. Now you have room to grow. So the goal is to look for double whatever you're risking. So if you're going to be risking $30, your winners should be 60 and above. Make sense? So let me know if this is making sense so far, Party 42 night, and let me know what are you currently doing? Are you currently risking 30 to make 60, or is that not how the results look right now? Let me know. Guys, drop a like if you've learned anything throughout the stream. Hit subscribe if you're not already subscribed so you guys are notified when we go live. And also, we just dropped an incredible YouTube video from the FX Summit conference that we just recently hosted here in Miami. And the funded traders who manage over $10 million in funded capital were giving their advice on stage about how to get funded. So I highly recommend you guys check out this video as soon as this stream ends. Let us know your thoughts in the comments section of this video. I'd love to hear you guys' thoughts. But we have Paladin, one of the biggest funded traders today. Of course, one of the few traders that I'd say I look up to in this space. We got Kyle, Jade Cap, right? So Kyle is one of those folks that I would say I look up to. I'd put Omer, he's the co-founder of Chart Addicts. He and I have been trading together since freaking 2017. And he's one of the people I look up to in trading. Kyle from Jade Capital, I look up to him for sure. And Umar Ashraf. So those guys, absolutely solid. Check out what they said on stage about funded trading. These guys have, Kyle pulled out $500,000 last year, and he pulled out almost $750,000 from prop firms this year. Paladin has made hundreds of thousands of dollars trading prop firms. So has O. So has Josh. This stage was absolutely phenomenal. Okay, so I highly recommend you guys check that out after this stream is done. The chart getting boring. I'm out. Have a great day. Take it easy. Thank you, sir. Makes a lot of sense. I've been risking 2% per trade. Oh, Lord, have mercy. With 2% risk per trade, if you lose 3 trades that day, your account's gone. With 2% risk, if you lose 5 trades total net, your account is completely gone. So you do not want to be risking 2%. Now, party for tonight, what have the results been? So if you're risking 2%, which means that you're risking $120 per trade, what does your average winner look like? Is it $30? Is it $60? Is it 120? Is it more than 120? What do your winners look like if you open up your MetaTrader and scroll through? Would you see a bunch of $20 winners, $50 winners? What does it look like? Final reminder before the weekend, ladies and gentlemen, if you guys have not already secured your seat for the February masterclass, get started. All the New Year's resolution folks, you guys want to make 2024 your best year ever. Let me be very clear that you're not going to get new results next year doing the same actions. So if you guys have been getting the same results, trying the same thing, party hopping strategies, not being consistent long enough with one consistent system, and not letting that momentum work for you, that's the first thing that I would encourage everyone to do in 2024. If you want to make it your year, if you want to make it that year that changes your life. So the live class link is going to be in the description below in the video. You guys can head over to chartaddictsfx.com, go to the tab that says live classes and pre-register before prices go to full price in January. Coaching. If you guys are interested in 1 session, 3 session, or 5 session coaching, you can either just choose the plan directly and secure your seat before those run out. I can only take on so many students. These are very, very limited spots. Or you can book a call with our team members to see if coaching is appropriate for you. If coaching is not appropriate for you, we will guide you to the best resources possible, whether it's our free stuff on YouTube, whether it's the live class to get a strategy down, or we'll encourage you to do coaching if we genuinely feel like you have what it takes, but you're getting in your own way and you just need to work with a professional to get through some of those bad habits. So chartaddictsfx.com, click the link in the description. That's there. Another reminder is that the FX Summit Conference is going to be hosted in Dubai, November 15 to the 17th. If you or anyone you know is interested in having a booth or exhibit display at the FX Summit, please reach out to us as soon as possible to get you locked in and take advantage of the discounted tickets before prices go to full price. So you have half off the VIP ticket access, the elite access, and the general admission. VIP access every year, you get to hang out with the biggest names and the biggest traders in the Forex space, learn from them, have conversations. And of course, if anyone has been to the FX Summit and has gotten a VIP, I'd love to hear your thoughts in the description, in the comment section, excuse me. Let me know, is the VIP worth it? Did you get to hang out with the people you thought you'd hang out with? Did you get a piece of insight having those conversations with millionaire traders that you thought would change your life? And just let me know in the description, how has your experience with the FX Summit been? If you guys have attended. This is the largest conference for traders, investors, and entrepreneurs worldwide. And I know that a lot of people say that, but just based on our attendance last year, we blew out every Forex conference that happens worldwide. It's usually a bunch of events. There's an expo, there's a conference, there's car shows, there's meetups. There's a chance to meet some of the biggest names in the space. We got Raul here. Here's me standing in front of all these supercars. This is Pierce Crosby, the general manager of TradingView. So again, we use TradingView. We use Owanda's price quotes. The founder of Owanda and the founder and the executive team of TradingView are huge supporters of the conference, and they show up every year to support, and they will be there in Dubai representing TradingView and Owanda. So would love to see all of you guys there. It's going to be November 15th to the 17th in 2024. You have basically a year to plan for it. For all you guys that thinks that it's too expensive, this and that, this is what I would recommend all of you to do, is to show up to this conference and get the absolute best info about where brokers are headed, new technology in the space, and the future of Forex trading. Party42 Night says, I'm happy when I close and I see $20. Okay, so you're risking 2% of your account, and then you're taking profits at less than 0.5%. So of course, if you keep losing 120, you lose 120. Now you just lost $240. You would have to win 12 trades in a row. You would have to put 12 trades in a row in order to break even. And that's not even including fees. Okay, so party for tonight, switch these around. You are now going to be risking 20 to make 120 or to make 60. And as long as you keep your losses under that 0.5%, so you keep your losses at 30 to $40 maximum. I don't care what you got to do. Lower your lot size because holding a very big lot size is not the way to go with an account this size. Don't be risking 2% of your account, man. Does that make sense, party for tonight? You got to make sure that you're switching that risk and reward. So you're holding your losses too long and you're cutting your winners too short. You got to do the opposite. If you're having bad entries, that's also going to mess up your risk and reward. There is no A plus. You don't know what market can do. Stick to your risk management. Okay, let me see. What are your thoughts on bigger risk on A plus setups? Or should all risk be the same? Yeah, MGTID just answered it perfectly. I couldn't have said it better myself. There is no such thing as an A plus setup. You don't know which trade is going to go against you and which trade is going to play out. If we did, we'd all be trillionaires. Stick to your risk management because if that A plus setup doesn't work, it's going to hold you back and it's really going to set you back. That is such a good answer, MGTID. I'm really happy to see that, bro. Good stuff. And also, didn't you just say that you're about to go to the gym or something? You said the charts are getting boring or something? What the fuck happened? He's out here still giving out good advice. That's a real chart addict. Okay, Edward Mendez says, isn't that Martingale trading, putting two lots under one? Martingale trading it's similar, but Martingale has more of a gambling approach. For me, it's a very, very clear outline of how much I'm risking. For Martingale basically just says keep doubling down until it pushes back up. For me, I have two limits that stop this from being kind of a martingale. And in case you guys don't know what martingale is, it's a gambling strategy where you just keep doubling up on your bets until you make all your money back. So the first time you would bet $100 to make 200 and you lose the 100. So the next time what you would do is instead of going down the risk, you start betting 200 to make 400. Okay, and then you lose the 200. Now you're down 300 bucks. So the next time you'll risk 400 to make 800. And you're basically hoping that one of these trades plays out and it makes all the money back. That is a gambling approach. Now, what I'm doing is with my risk scaling strategy, is what I'm doing is just mitigating my overall risk. So if I'm willing to throw $500 on a trade, I'm not entering 500 and then 500 and then 500 and then 500 as I'm scaling. What I'll do is I'll split this between 3 orders. So the first trade, I will risk $100 because I always put my lower risk at the top if I'm buying. As the market retraces and gives me a much better discounted entry, I'll put in the 200 risk here. And then after it wicks and then pushes back up, I might put another $200 of risk here. Always making sure to put my heavier entries lower than my lighter entries. The reason for that is there used to be times where I would martingale, where I would basically just put $200 risk, and then the market would start to retrace on me, and now I'm in a lot of drawdown. And I would start to second guess re-entering. I would second guess whether the trade was going to play out. And so then I would get scared and I might enter another position with the small risk right here at $100. What would happen is if the market retraced, I would be in profits like $60 on this lower one, but I'd be in negative 150 on the top one. So I'm still in negative total, and the market is sitting in between my two entries. So instead, what I do now is I risk the smaller one on top. So I'll enter the first entry here. And then as I'm in drawdown, I'll only be in drawdown negative $60. But then I enter another position down here where I'm risking a lot more. So the market will come down and then start to retrace. So that way, when the market is in between my two entries, instead of being in negative like I was before, now I'm positive 150 on the lower entry because it's heavier, it's a bigger position size, and I'm only in drawdown negative 60 on the top one. If I no longer believe in the trade, I can just close out both positions and walk away with my plus 75. Or this is not plus 75, whatever it might be. Plus 85? I can't even count today. 95? Yes, 90. I think it's 90. So you can walk away with positive equity if you're doing it this way. This has helped me out because even the trades that reverse on me, even the trades that just go up a little bit and then reverse, I'm able to hedge myself out of. What'll usually happen is the market will hit my first entry and I'll just close it at zero. And now I'm floating $250 profit on the bottom one. I protect the trade. So now I have zero risk. I got out of this shitty position. And if the market keeps going, great. I can make a lot of money because I have a big position sitting with a wick entry here. Put a one in the chat if that makes sense. This was a master class right here in scaling, guys. I don't usually give out this level of sauce in the live streams, but damn, if you ask me a good question, I'm going to reply with a great answer. Put a one in the chat if that makes sense. So I guess the difference between Martingale and a responsible risk scaling strategy is having a clearly defined maximum risk, having a clearly defined technical framework for when you're going to stop entering into the trend, and then really just setting those parameters as opposed to just keep forcing trades in the opposite direction of the trend as it's falling. Goblo says you are doing yourself a disservice if you're not going to events like the FX Summit. How come, Goblo? What do you feel like was the big takeaway from that event? So I dropped a question in the private mentorship for you. Maybe if you can answer it after the YouTube call in the private mentorship. Mike, would you mind if I pull it up on the stream or do you want to keep it private? Yes, sir. I appreciate it. I'll give you the feedback next week. Party for 2 nights. Spend all weekend reviewing your trades. Don't study the markets, but study your own performance. All right. This is the last thing I'm going to say. It seems like the market is respecting the 88.6 here. We've had a beautiful break and then double bottom retest already at that zone. This would have been a great re-entry right here for a scalp. Of course, TP1, TP2, and TP3. So we're almost at TP1 here. And just to be very accurate, I'll actually fix up this zone. It looks like we're about to hit TP1. Okay, so we'll see if the market can break. The market is probably going to push above it. If it closes under TP1, all right, it can't break above that 16,630, then it will continue to the downside. If the market breaks above this take profit 1 level and sustains above, it's going to head to 16,750 and then 16,800. And my final take profit is that 16,850 zone. Again, finding great trades, but not taking them because they don't fit your criteria. Bobby said that till this day, I still talk about the FX Summit from 2022. 24 is the one I'm really looking forward to. Me and you both, dude. Just look at the event itself. Like the 2022 pictures are some of my most memorable pictures of all time. Like standing on stage with TradingView was incredible. You know, we had the trading challenge with TradingView. We had just how great the expo ended up looking. All the supercars, all the Q banks, everybody. Just an absolute standout event. The trading challenge, this is an absolute, people can compete over prizes. Incredible. Action-packed, full of knowledge, full of learning, full of engagement. And Bobby, I'm pretty sure if I flip through these photos, I'll see you in here. This was our crypto panel. Look how beautiful this venue was. This is the top floor. We were doing these private meetings, these small workshops inside of these rooms, specifically for technical analysis, specifically for some of these concepts. I just had the whole squad. I went around and told everybody, yo, I'm going to host a quick class. Had everybody pulling up. It was an absolute banger of a master class. We got Lewis Neal, founder of Sway, up here. This is before Sway, before all that. Just an awesome experience. What a show. And in case you guys missed it, we've put up the recordings from the FX Summit on YouTube for you all to check out. We just put up some recent videos here. So highly recommend you guys check those out. This is the FIP panel before the issue. We had the Drew, Emil, Q, Ryan, the Wall Street Academy booth, and the expo. Everybody was huddled around Q. Like Q had to get private security after the first day because of how many people would back him into a wall and just yell questions at him. I gained so much respect for Q at these events because he wasn't shying away from answering any questions. He spent 4 or 5 hours, no matter who it was. People had him backed against the wall, did not shy away at all, gave people solid advice. And I think that that's absolutely incredible. Obviously, the booths were insane. People can come and promote. This is Enigma. This is our Signals app. We were out there representing for the team. Shout out to Jacob and Bobby. I told you if I scroll long enough, I'd see you and the boys squatted up, taking notes, and really just having a great time. All right, this trade played out. TP2 just got hit, I believe. Again, I'm not in this trade. Not in this trade, but what happened was we just took the London lows. The London lows, they got violated. So typically when the volume is high, we'll retest those Tokyo lows, but if not, I guess London is the way to go. TP1 just got violated, and then TP2 is going to be the next area of interest. Cool stuff. So Mike said he had a question for me in the chat. Jay Olivier said, hang out with QB Stu on the yacht, and I was able to pick his brain. It was the best week of my year. VIP was definitely worth it. That's awesome. When did you say the FX Summit ticket prices were going up? We're going to do January 1st is when prices go up. We might extend it to mid-January if enough people reach out, but I think that January 1st is going to be that deadline to really get things on the road. Cliffco said, I went to 2023, met the traders that I admire, and the experience made the Forex world real. And it's only getting realer. Our job is to be able to filter out the sketchy companies and then to only bring together the future of Forex so that when you guys come to this event, you can trust that the future of how we're all going to be trading, the platforms to use, the most responsible and respectable names are going to be at the FX Summit. And if they're not at the FX Summit, it's kind of like getting kicked off MetaQuotes. Okay, it's just a bad sign. Hey, Roy, quick question regarding the news and their impact on markets. Let's say the Bank of Japan decided to keep their rate unchanged and every pair JPY spike up and are bullish. However, later in the week, England CPI comes in and less than expected, and GBP is bearish. So I explained this yesterday, and I'll make this very quick. Whenever a data release happens, don't look at the immediate response in the market as the true response. So typically, whenever you have a data release, and that's actually important, like CPI, like GDP, like the rate news, the immediate reaction is going to be a market kind of like hype reaction. It'll either be market makers looking to take advantage of the fear by just putting in those big trade orders. It could be institutions like banks moving money around under the excuse of, under the excuse of this new policy. You will see the news play out on the daily and the weekly. So go to the higher time frames, and overall the trend is going to reflect the direction of this news. But like my good friend Bob Elliott, top macroeconomist, always tells me, don't put too much favor on any one news event. Don't put any favor on any one data release. 1 month of data is just a piece in the overall picture. You want to look at fundamental news in terms of quarters, so 3 months in a row. So if you have a GDP print 3 months in a row, or CPI print comes down 3 months in a row, now you can accurately say that inflation is coming down for that country. The last piece I would tell you, Sheikh Munir, is everything in currencies is relative. Meaning, if a currency is going up, but everything else is also going up, you could have that pair go down. So if the dollar is very strong, but everything else is stronger that day, you'll see a lot of the dollar pairs go down. So the yen could be bullish or bearish. But if everything else is more bullish or bearish, then you'll still see that reaction. So think in terms of relative. Don't think in terms of absolutes when it comes to currencies. I hope that answered your question. All right, let me read Mike's question real quick. Can you go over yesterday's buy? I found it hard to find an exit position of the trade. We took it as the support of the 88.6 right before the market crashed. I had opportunity to close and profit, but ended up hitting my stop loss. I know I did a bad trade management by not moving stop loss to break even, and for sure I got greedy thinking it was going to be able to make it on Monday. Mike, the reason I don't actually, I guess, yeah, I will explain it. So I'm going to make this very quick because I can't really just give out free info about the NAS class. So, Mike, hopefully this answers it. If not, I'll be able to cover this in the private chat in much more detail if you have questions. So if the market has a drop and we are looking for a sell at the 88.6, so what we do is we just draw our Fibonacci. And I want to wait for the 88.6. If the market breaks above and we have a new high, which is what happened yesterday, what will happen is the market will come back and use that sell level that it violated as a support. And more than likely, it would actually come under between 70 to 80% or 70 to 90%. So it'll go down and then push back up. So the buys that we took yesterday were off this sequence at the 88.6. We took the buys, we were in profit, except once it hit the previous high here, I protected my trade. Because what ended up happening is I took partial profits and then the market reversed and it hit my break even. Whenever you're entering a trade this high up in a trend, you want to be very, very careful about risk management and trade management. If we enter down here, you can hold this trade without putting your stops to break even or taking partials as quickly. But if we're entering close to highs, if we're entering all the way up here, I'm very quick to move my stops to break even. I'm very quick to not be I'm not like loose with the market, like, oh, let's see what happens. No, I'm very quick to protect it because I know I got a bad entry. Make sense? So I guess it's just knowing where you are in the sequence. And if you're at a shitty place, 100% be very protective. Mike, I got high hopes for every single person in this Zoom call, man. I've worked with all of you guys at least once, face to face. Well, most of you. I got high hopes for all of you. Walter, Shannon, Noah, Mike, Luke, Lessman, Josh, Jamil, Jeffner, James, Jacques, Gabe, Frenchie, Golly, I already know you crushing it. Cliffco, Bobby, Bianca, Alex, Two Step. If I could put together a dream team, these people would be on it. I'm proud of you guys, and that was an excellent question, Mike. Really, really going through and being deliberate. Okay, yesterday's trade happened, and we all just moved past it like it wasn't a thing. No. Roy, what happened? I need you guys to stop me and ask and be like, what actually happened? That way you are being deliberate. So every trade counts. You can look at 100 trades half-assed and not get anything out of it. But if you look at an individual trade day by day, you look at individual trades and you really piece apart what happened, that's how you make the progress that we're all looking for. Not 6 months we have to wait, but maybe 5 weeks. I got to go. Streams are being helpful. Thank you for your time and wisdom. Gabe, good to see you. CPI at 8:30 in the morning. I'll be on a flight, I believe. So I might be at the airport. If I still have not taken off, then I'll definitely send out the link. I'm going to check my flight details. I'll be honest, I don't really know what time I'm flying out. I think I'm flying out at 8:30 actually. So I might have to send out the link before. Okay. Is there a rule of thumb like the latest news is the most important? All right, Sheikh Mooney, I really hope that helped. 2024, we're incoming. James, we're gonna fucking crush 2024. Cliffco says, thanks, coach. You the GOAT. I'm not a GOAT. I just see in you what you might not be able to see in yourself. I'm seeing the potential that I know I had at one point that nobody else was seeing in me because the results weren't there. And I just had to fix a few simple things. And when I finally fixed them, the only thing I could think was, why did I not do this sooner? And that's what I'm trying to bring to all of you. That's what Chart Addicts is. Chart Addicts is all the things I learned over the years, and I just realized, why didn't I just do this sooner? A lot of people tell you, you have to feel like you're ready. And when you feel like you're ready as a trader, you'll be able to hold the trades. You have to build that and this. Look, I don't give a fuck how you feel, and neither does the market. If I gave you a set of mechanical actions, and if you felt shitty, you still did those mechanical actions. Or if you felt great, you still did those mechanical actions. You would still get the same results. If you're having a sad day but you still followed all the rules, or if you're having a great day and you followed all the rules, you're going to get the same results. So what we're trying to do at Chart Addicts is to just dissect those things. that if I had just started doing them sooner, it would 100% have guided me in the right path and made me profitable sooner. That's what I'm trying to bring to all of you, whether it's these live streams, whether it's the individual one-on-one coaching with you guys, whether it's the live classes. This is what we're trying, this is the essence that we're trying to bring, is the stuff that we wish we had. Even the FX Summit. Come and talk to the people that I wish I had been able to talk to, right? Lasaldo, hilarious stories. But Lasaldo used to tell me all the time, when I would be posting trade ideas, I'd post like 30 trade ideas on every euro pair, every GBP pair, every single thing. And then he would call me out in the group chats like, bro, you're posting all these profits, but you ain't really making money. Like, I've never seen you post money. What's the deal? And it would hurt, it'd be fucking insulting. I'm like, damn, bro, I'm putting in all this work. I'm failing classes. I'm doing all this shit. And this guy's calling me out that I'm still broke. And it did not feel good. But what I realized was the thing I learned from Lasalda was he had 4 lines on a screen and he was trading zone to zone on GBP AUD and was making $20,000, $30,000 profits. And me, I was over here working my ass off, finding every wick harmonic entry with Wyckoff, Elliott wave convergence, and I couldn't make a fucking dime. So I had to simplify my trading, and I learned less was more. These are the lessons that could have taken me a whole another year to learn, but I needed someone to call me out. I needed someone to show me that I was overcomplicating trading, and that overcomplicating it meant that I was working too hard and making too little. And so these are the things that'll change your life. These are the stories and the conversations that'll change your life. And that's the essence that we try to bring. Look how many traders are in this room. Look how many people are just like you going through the same journey, right? So there was at the first conference, we had 1,000 people show up. That's like 10 of these live streams at the same time in person. Those are the conversations that'll really allow you to grow and to see what's possible. These small workshop rooms where you can really ask questions and kind of get into people's head will really take you to the next level. And hearing people's stories of making 6 figures, whatever you think about some of these traders, I was there when James made the $1 million. James came and stayed at my house for a week when we did our podcast together. And I saw him go from when he first showed up, he had just made $50,000 and he took a 50K account to 120. By the time he left my house, that $120,000 account was floating at $700,000. This is still live on YouTube on a broker that he did not own or have an affiliation with at the time. And he had ran up the fucking bag. And I saw his psychology at the time. I went to go to the bathroom middle of the night. And he's up trading. It's like 3 a.m. We have a live stream at 8 a.m. and a podcast at 10. And this guy's gotten no sleep. And he just lost 50 grand, $50,000 on that first trade he took right before the CPI news. And then he had stayed up all night. And then by the time I woke up, he was floating 100 grand on another trade. And he was doing it live on our stream, on one of these live streams. And I was seeing his psychology, and I'm telling him when it hit $200,000 to close it, and he wouldn't close. And he was like, no, I'm waiting for it to hit 200K, then I'm going to close it. The mindset of him holding that trade and committing to his strategy, whether he was going to lose or not, he knew he could lose. He was not being stubborn or ignorant about the fact that the market could reverse, but he was dead steady on his strategy. There's a lot to learn from that. And then having a run to be able to scale that capital up. Just seeing this stuff in person, doing it on Instagram is cool, but meeting these folks, how Jason turned $500 to $85,000 in a week and a half. I saw that too on USD JPY. These are stories that I witnessed. And at the time, they really pushed me as a trader. And I'm like, it's selfish for me to have access to this information and other folks can't have access. Now, over the years, we've really tried to be selective of who we allow on stages and things. And so next year is going to be even better. When you guys look at the video I told you to go watch after on our channel, to go to the Chart Addicts YouTube and to go watch that video with Paladin and Riz and Omar and the rest of the guys. You can see the level of guests that we've had on the stage. So we have these funded traders. These guys making 750K on multiple prop firms is ridiculous. Why am I only getting shown? There's so many people that did vlogs and stuff. So if you guys actually want like a real sense of what people went through day by day. You guys can go check out all these vlogs that people did for the FX Summit. They did one for FX Summit 22, one for Summit 23. You guys can go check those out. I'm just trying to find the videos that we just dropped. Why is it not showing up? How are other people's videos ranking above ours? That's how you know our SEO is, we're getting robbed, people. We go to recently uploaded. Here we go. This is ridiculous. This is from 2022. We dropped a bunch of videos. Okay, here we go. There's the the algo trading panel. So if you guys are interested in having automated trading, if people are trying to sell you bots on social media or EAs or whatever the fuck it is, please learn about bots before you just jump into an EA. All right, because they're going to sell you some repackaged EA that they got on for $50 online, and they're going to try to pitch it to you. So make sure that you guys are not falling for that, and you have what it takes. The funded traders panel is right here, and then of course you can hear directly from TradingView talk about unregulated brokers. So all these hot topics that everyone's always asking me about, Roy, what broker should I use, and what brokers are the good ones? Hear it from TradingView, not from me. People are always asking me, yo, this person is trying to sell an algo or an EA. Here's two guys that one of them started an entire platform that launches and sells EAs, and the other one is a coder and a technologist that has built tons of EAs, knows exactly the ins and out of the technology and their limitations. Hear it from them. And we'll be posting the rest of the recordings one by one as they are released. Okay. So I highly recommend you guys checking those out on the channel after the stream. All right. You said you are a goat. No one does this. I mean, I just fit the description, my friend. Thanks for the information. All right, y'all. Take it easy and happy and safe trading, everybody. I love these two traders, man. I hate when they all got beef over money or some shit. Just imagine if they were all friends. Well, I'll be honest, the biggest mistake I made was being naive enough to try to bring the industry together because I tried my ass off. We put up so much money to make the first two events happen just to bring the industry together. There was too much needless beef on social media, and none of it was helping traders. By involving myself in the middle of that shit, guys, I started to realize how childish some of these folks are. Some of these folks are more focused on drama than they are on building great technology or building a great service or caring about traders. And so I walked in like this naive kind of kid, really trying to bring the whole industry together. And instead, I ended up, taking years off my life and fucking dealing with drama and headaches that really kind of turned me off from wanting to work with the industry. Now, luckily, God put me on this mission for a reason because I can handle a lot more than most. And so I'm not going to let that deter me. The fact that we lost money and paid out of pocket to host a lot of these folks at our conference, and they still chose to focus on useless BS. So the priority for the conference is to bring together traders, to focus on traders and what they need, and then to bring the industry forward by identifying the shady behavior, kicking them off the stages and not giving them a platform, and then really putting on TradingView and Awanda and Binance and some of the companies that are on a global stage, crushing it, and letting them talk to traders so we can establish the Forex space as the most legitimate thing that we have. Because until we get to that point, people, we're not going to have CFDs legal to trade in America. We're not going to start seeing brokers offer better leverage. We're not going to see anyone care about traders until we start acting like we deserve that in this industry. And so the more shady behavior that we allow, the longer it's going to take for us to have a legitimate industry. The FX Summit is that first step in the right direction to host the most legitimate names, to really try to be that change, and then to try to inspire people, to have that best progress that they can have. All right, yo, happy safe trading. This is why we don't chase. The market hit TP1, almost hit TP2. Do not chase the markets. Instead, allow the markets to come to you. Just before we get off, the market, if it holds support right here, will then continue off of the 88.6 retest. If it breaks through the zone, then it's going to head down to these daily lows where we can look for a buy position. All right, happy and safe trading, everybody. I'll catch you bright and early tomorrow if there's a stream. If there's not a stream, I might just do a market outlook tonight. I know we did not get to cover news, but I'll make sure to cover everything in a later video later this week. All right, grab your tickets. Make sure to sign up for the masterclass. And if you refer a friend to the masterclass and you want your 3 free months of access, make sure to reach out to us as soon as possible so you get that access. Take it easy, y'all. Peace.